Hello and welcome to this episode of Nucleus Wealth Empower, where I go looking for what the good life is and how finance can empower and support us in achieving that. In the face of the recent IPCC report into climate change, today we're going to look at the report and how you can use your finances to empower yourself around an issue that can often feel apocalyptic. Before we get into the show, though, I'd like to start in the spirit of reconciliation and acknowledge the traditional custodians of country throughout Australia and their connections to the land, sea, and community. I pay my respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So, for this huge topic, I am really delighted to have Rachel Alembakis, who is the managing editor of FS Sustainability, help talk us through some ways in which we can start to see maybe a little bit of hope in this report. Welcome, Rachel, and thanks for being here.
Hi, Shelley. Thank you so much for having me. It's a real pleasure.
It's fantastic. So maybe to start off, do you want to tell us a little bit about your journey to become managing editor at FS Sustainability and about the publication itself?
Sure. Well, I've been a financial writer for, about 14 or 15 years now, looking at it, actually slightly more at this point. And I came to covering sustainability after I came to Australia. I got into the game of covering institutional finance, mainly when I was living in London. When I moved to Australia, obviously the superannuation market is of considerable interest around the world, so carried that onto here. And quickly as I was reporting, I came across this organization called the United Nations Principles for Responsible Investment. And one of the interesting things at the time, and we're talking about, 2008, 2009, Australia had the fourth highest number of signatories to the UNPRI. But it was often confusing trying to match up the action that signatories were taking with what they were saying in their, public-facing documents, which is not to say that, superannuation funds and fund managers in Australia weren't doing things to accord with the UNPRI. It could be really challenging to connect that signatory and the public-facing action. So for a variety of personal and professional reasons, I decided to launch a publication in about almost 11 years ago now that looked at sort of this nexus of environmental, social, and corporate governance activity through two main lenses, one being the way that investors looked at ESG and integrated it into their decision-making process, and the way in which corporates, particularly corporate Australia, integrated ESG into their strategy. And there's a huge overlap in that area, particularly in a country like Australia, where investors are so engaged in being active owners and engaging with companies to ask them about what they're doing on ESG. Fast forward a couple of years, I then was privileged to find a partner in Rainmaker Information, the company that owns the publication now known as FS Sustainability. I joined on board with them in 2019 when I sold the publication to them. I've been managing editor ever since.
Fantastic. One of the things that comes to mind around when you're talking about that 08, 09 time is that, as you said, there's a lot of signatories, but there wasn't necessarily a lot of clarity or definition around the actions that needed to be taken. And so, my sense then, I was very early in my career, that maybe people were trying to do the right thing, but there wasn't that consensus on what it was. Is that what you thought, or?
Well, that was the question that I had in my mind approaching this. And, to be honest, ESG has been on I hate to use the word, but it's been on a journey from ethical investing, sort of the roots in socially responsible investment, the clean tech investment boom and bust in the early 2000s, into what's now sort of developing and morphing into sort of the different categories of ESG investing, which can kind of sometimes have a risk-adjusted view towards it, to responsible investing, to ethical investing, and now into impact investing. But yes, certainly, there has, and I think persistently is still a lack of clarity about what these different terms mean. They can seem really jargony. They can seem really hard to access. And look, I've been, as I say, doing this for nearly 11 years, and it requires a close eye and a lot of attention on definitions and matching up actions with commitments.
Yeah, it is. The amount of jargon there is around it is, it makes it more challenging for people to access it in the sense that
On the downside, but on the positive side, because I'm sort of a glass half full person
I love that.
by nature, there's never been more opportunity for people to access investments that align with their personal beliefs.
Mm.
There's obviously more action that needs to be done. I know we're going to jump into this, Shelley, but there's never been more availability in terms of, and we're still more, as I say, still more needs to be done, but there's never been more choice.
Fantastic. Okay, before we jump into the actual depth of this, a few admin things around the podcast or webinar. A reminder to listeners, please keep in mind that anything we discuss today is general advice in nature and doesn't necessarily relate to your personal circumstances. If you would like to get in touch to discuss anything, you can do that through the contact page on the Nucleus Wealth website, or of course, with Rachel through the FS Sustainability website. And we will have links to all of that in the show notes. And if you haven't already, please subscribe and click the notification bell to be notified when we go live or have a new webinar to watch, or follow us on your preferred podcast platform so you can help our show grow. Okay, so Rachel, I really wanted to start with the IPCC report. It's still a mouthful for me, but can you help us understand who's the IPCC and what has the report said that's just come out?
Sure. Well, IPCC stands for the Intergovernmental Panel on Climate Change, and it is, from what you can gather a bit from what it is from the title, it is an intergovernmental group of scientists from around the world that gather together and update us to the state of climate change every 6 years. The report was initially supposed to come out last year. COVID did what it's done to everybody else, pushed back the publication of the report slightly. And so now we have this report, which is actually the first of 3 reports. So the report that came out deals with the physical science of climate change, i.e. how climate change is physically changing the world that we live in. So basically, the report is, there's not a lot of good news, but there is one silver lining in all of this. The bad news is really, really bad. It's been called a code red for humanity, which is not dramatic. The report warns that unless we take quick action now, there is a very small window to contain climate change to between 1.5 degrees centigrade or even 2 degrees. The changes are happening faster than previously thought and with more extreme impacts than previously thought. So, if you get into the report, and by no means have I read the whole report, it's 600 pages. I've gone through a lot of the executive summaries. I've read a lot of analysis, as I'm sure you have, Shelley. But basically, the bottom line here is that if we don't contain global warming to 1.5 and tops at 2 degrees, the changes that we're seeing now are baked in, and they will get worse.
Yeah. I was listening to the Daily, the podcast by the New York Times, an episode about this, and their reporter broke it down into three parts. But I thought he was really good at being really clear at what the underlying takeaway that everyone needs to have from it, from what I've heard. So, I'd love to hear what you think on it, but it was basically, we need to stop emitting carbon and climate change gases now.
Yep.
And so I wanted to see if we're on the same wavelength, if that's the key takeaway that you got as well.
100%.
Because I think it's so important in terms of everything else we're going to discuss about investments and your personal actions, to understand that is the action that needs to be taken.
Yes.
And for example, Woodside Petroleum are saying that they're targeting net neutral emissions by 2050, right? Almost 30 years time. So that is in stark contrast to this report. And so I thought, really highlighting that at the start of our conversation would help to bring everything back to that.
Yeah, look, the report, the exact wording from the report is immediate, rapid, large-scale reductions in greenhouse gas emissions. They're unequivocal about this. And if, reading the report, listening to the commentary, the scientists have said that the modeling and the data that they used to come to this conclusion has only gotten stronger since the last report that they did. So there's not all that much wiggle room. Models are always indicative. They're always impacted by events on the ground, because models are theoretical constructs. But the Intergovernmental Panel on Climate Change are telling us that the models are getting better, the data is getting better, and the consequences are more revelatory as dire.
And when you say models, I think the other part of it is that it's not like a handful of reports, right? I
Oh,
mean, this is thousands. I think, did you say to me the other day it's 14,000? I might be way off on that number, but
can't
it's
remember the 14,000, but they were talking about a significant number of climate scientists around the world who are doing peer-reviewed, peer-vetted science on climate change.
yeah, and they're coming at it from different directions,
Mhm,
and the overall is that the
mhm,
IPCC have come to this consensus
mhm.
using very, very strong language, which
100%.
contrasts to previously.
Yeah. And in this report, as contrast to other reports, there's a lot of granular detail about regional impacts. So you can go into the report and you can look exactly as to how the models are suggesting this is going to impact on Australia. It's not good.
Mhm.
I mean, when you're talking about, again, quoting from the report says there are going to be increases in the frequency and intensity of hot extremes, marine heat waves, heavy precipitation, agriculture, ecological droughts in some regions, proportion of intense tropical cyclones, reductions in Arctic ice, snow cover, and permafrost. So there's
It's
not a lot of waffle language in there.
which is, it's a lot to hear,
It
which is,
is.
really kind of how I preface the show,
Yeah.
um, and absorb, and you
Hmm.
can be left feeling hopeless.
Hmm.
But at the same time, I think that our leaders need to hear this, the
Yeah.
seriousness of that language, I
And
hope.
this report is coming out in advance of the UN Climate Change Conference, which is commonly known as COP26. This
Okay.
is this is a conference that again was postponed from last year due to COVID. It will take place in Glasgow, and it's where world leaders come together to update their commitments on cutting carbon greenhouse gas emissions in line with Paris-aligned targets. Australia is under an enormous amount of pressure to improve its commitments. The European Union, the United States, and China have all ratcheted up the pressure as our major trading partners, and countries are increasing the rapidity and intensity of their plans to cut greenhouse gas emissions.
It's good to see that pressure is being put on Australia. It's
Mm-hmm.
not great to see not a lot of movement in it, but that's a rabbit hole.
It's definitely a rabbit hole, but when you have Australia's number one, two, and three trading partners saying that, particularly the European, we'll go down, I mean, and rabbit hole. I'll keep this as surface level as possible, but the European Union has said that it's going to introduce something called the Carbon Border Adjustment Mechanism, CBAM, which is basically a levy on countries that do not have what they deem to be strong enough climate greenhouse gas emission reductions targets. They say that because the European Union has taken action to cut greenhouse gas emissions and that puts a cost on goods and services, they will introduce a levy to equalize prices on imports into the European Union in line with basically indicatively the price on carbon in the European Union. So anything that goes into the European Union that doesn't have an explicit carbon price on it will have a carbon price on
Yeah.
it. And that's going to affect Australia tremendously.
That is honestly music to my ears.
There's a lot of interesting moving parts going around.
Okay, let's, if you're happy to, jump into investing.
Yeah,
So
let's go for that. Yeah, what
maybe,
does this mean for
because we could
everybody?
talk about the politics forever, right?
100%.
There's a lot. I'm certainly not an expert to talk about it, so I don't want to take airtime from. I mean, obviously you are, but I do want listeners to get some actionable things out of the episode.
Sure.
Maybe if it's all right, I'll preface it by saying at Nucleus Wealth, we often think about ethical investing as being multifaceted, but one way is that we don't think that everyone necessarily has the same beliefs and
Mm,
ethics. So we give people the ability to personalize it. But also for me, a really important message that I want to get across is it's not just about the investing. It's about what you do with all your money, and a really, really important part of that is consumption side of it. And so, obviously an investment is in a company that runs a service and requires people to consume its goods or services to make money and therefore increase your investments. So we'll talk about consumption later on. Let's
mhm.
start with investment. Is there anything you want to add to the framework that I sort of think about it?
Look, I think that makes a lot of sense. We consume within an economy in a number of ways as investors, as consumers, as producers ourselves. So yeah, I think breaking it down is a useful way of going about it. But so let's start. You want to start on the investment side, Shelley?
Yeah, let's start with
Oh,
investments.
great. So as a general observation, as I said at the top, while supply is not perfect, there's never been more attention being paid to putting together investment choice that matches people's personal beliefs. Often for people, that starting point can be with your superannuation fund. It's commonly touted that if you own a house, your house and your super fund are your two biggest sources of financial wealth in your life. You can make choices around your house, and I'm sure we can talk about that in the consumption section. But when you're talking about your investment side, so I work for a company called Rainmaker Information. We have a research side, we have a research division as well, and we have recently tracked that there are 36 superannuation funds that we identify as ESG funds. And that's based on a number of criteria, mainly around their actions. Collectively, those 36 superannuation funds, and that's not necessarily a fund that is a green fund as such, but
Yeah,
it's a
so
fund that does.
let's clarify that. When you say a fund, you're talking about like an AMP or Australian Super or
Mhm.
CBUS. Is that what you mean at the fund
That's
level?
at the
And then
fund
they
level.
have the
That's right.
different the different products within that you can choose to invest in.
That's exactly correct. So, I won't go down the entire list of 36, but per
Top
Rainmaker,
five? Do you want
I'll give you the top five. I can definitely do that. So, according to the criteria that Rainmaker Information has developed, Australian Ethical Investments, CBUS Super, Australian Super, HESTA, and Aware Super have highest scores against our criteria, which includes diversity, the depth of their ESG reporting, their portfolio holdings disclosure, which is an important topic I'd love for us to talk about,
Yep.
Shelley. Investor groups that they belong to, the use of positive and negative screens, which gets to the techniques of ESG investing and other factors on top of that. So those are, that's a combination of retail and industry superannuation funds. As I said, we've identified 36 funds overall. Within those 36 funds, there's also 171 ESG investment options. So within your superannuation fund, I'm hoping most people are familiar, but within your superannuation fund, you often have choice between a mix of assets, a mix of approaches, risk levels, et cetera, et cetera. And some of these superannuation funds offer distinct ESG or green or responsible investment or ethical investment. They have a number of names. And so we've identified 171 specific ESG investment options. We estimate that among that 36, among that 171, there's about $160 billion in assets under management. So that's a significant part of the industry specifically towards ESG.
Yeah, it's a lot.
Mm.
But and I don't want to be Debbie Downer here, but last time I looked, Australian superannuation assets were about over $3 trillion.
Yeah, that
Right?
is the
So,
pitch. Look,
like,
I'm going very specifically by the ESG criteria that
yeah, okay.
Rainmaker has developed, and we are very deliberate and specific, or my colleagues are very specific and deliberate in terms of how they attribute. There's other estimates out there, the Responsible Investment Association Australasia, which is sort of a peak body
Mhm.
for responsible investment. They estimate that half of all assets under management in
Okay.
Australia that are professionally managed use one or more responsible investment techniques.
Techniques. Okay.
It's
Um,
just, again, this goes to some of the confusion you were talking about, Shelley. There's a lot of ways to slice and dice the information.
this is really good though, because I feel like with this example, we've got to the core of what is one of the first things you want to think about when you're thinking about ethical investing, which is um, there's a lot of nuance,
Mhm.
and you want to really understand
Yeah.
what is being done
Yeah,
so that you can make sure it's reflecting your beliefs and your views. So
absolutely.
you make sure you know what it is that you're getting,
Hmm.
basically, and that
Hmm.
does take extra work, but there's a lot of places
Hmm.
working to deliver that information in an accessible way, so it's only going to get more, I think.
Exactly. Look, RIA, the Responsible Investment Association Australasia, does offer a consumer-facing website called responsiblereturns.org,
Mhm.
and that allows you to dial in the things that you're passionate about on the ethical front, and they will show you a list of investment options from their responsibly certified products. So RIA has a certification process. They're very strict. They're transparent about it. So it accomplishes what it says on the tin, and so you can get an indicative idea based on RIA's certification qualifications, what's out
Okay.
there that matches your ethical choices.
That's excellent, because that's probably the first step, is to, when you're considering an investment, is to understand if it's an ethical one. What
Hmm.
are the criteria that they're going
Hmm.
to apply?
Hmm.
Um,
Yep.
and then start to look at the caveats to that. One that comes to mind is, they might it might say excludes fossil fuel
Hmm.
producers,
Hmm.
but only if it's more than 10% of their revenue or something like that.
Yep.
So you might actually have something in there that produces a small amount of fossil fuels,
Hmm.
because it's not hitting that exact criteria. And
Yeah.
that is, if you're comfortable with that, that is
Hmm.
absolutely fine. But you just want to make sure that you're
Yeah.
getting what you think you're getting,
A
right?
100%, 100%. Well, and not to spook the hometown host, but I'm aware that you have a calculator on the Nucleus website that allows consumers to do that. I've had some interesting conversations with Damien on that subject, and it's interesting. You can tinker the options to create what fits, but then the second step is finding investments that approximate what you're looking for, because there's a to get to an ethical choice of one is something that may be quite expensive or may not suit you from your risk and return profile as an investor.
Yep.
It's possible to design a specific portfolio, of different assets that meet both your ethical criteria and your financial criteria.
Mhm.
That can be expensive, or something that you're not interested in from your particular point in life. That's where things like managed funds and unit trusts, exchange traded products, and your superannuation fund can help you get in the right direction in a way that offers you potential investment return at a price that matches what you're looking for.
Okay.
There's a lot of balls up in the air, basically.
So many things. Do you, do you want to maybe dive into that one a bit more with an example, Rachel?
Well, okay, so if so, I would say, the first port of call, as I said, is your superannuation fund. Most of us who are in full-time employment all of us who are in full-time employment do have superannuation. When I was a freelancer, I had a superannuation fund as well, because it would be in Congress to be covering the super industry and not invested in a super fund. So I would say start with your super fund. Go and have a look. See what you can find out about the fund from their website.
Okay.
First and foremost, whether or not they take an overall approach to ESG. For example, super funds like CBUS, like HESTA, like Australian Ethical, like UniSuper, have things like a climate change policy, or some of them are starting to set net zero targets to adjust their portfolios in line with where we need to be to keep us all alive. Within those superannuation funds, you may find that just that portfolio level commitment is enough for you. They're doing enough on environmental and social and governance grounds to tick the boxes. And so, one of their default mixes or whatever might suit you. Then you can look at the specific subset of ESG options. Again, you'd have to go in and have a look, see whether or not the product is correct for you. That's something you have to decide on, and then you have that option, and that may get you a bit closer to what you're looking for, particularly on climate side. A lot of ESG options have things like more tilts towards renewable energy assets. They may apply things like screens for the sustainable development goals. There's a lot of choice out there. Then beyond that, then there's things like investment funds and investment products, and then consulting with a financial advisor if that's something that fits with your financial lifestyle.
I think one of the really interesting things that you've highlighted in that example, in terms of going, what is the actual fund company's policy, and
Hmm.
then think about the investment products, is that if you're making an investment
Hmm.
with an investment manager,
Hmm.
um, typically the investment manager will be for profit, making money out of that. So
Mhm.
they're providing you a service as well as obviously you're investing with the investments.
Mhm.
And so you might find cases, and I guess what I'm trying to get to here is greenwashing,
Yeah.
where the investment company is not really following any sort
Mhm.
of is not following it in their business, is not trying to implement it for them, but they
Mhm.
have the products because
Mhm.
it's very fashionable within investment at the moment, and it's it's a way for them to sell product and
Yes.
make money. So
Mhm.
I guess that's one way you could think about greenwashing.
Mm. Look, greenwashing is a huge concern, Shelley. The financial regulator, ASIC, has publicly said that they're reviewing whether sustainably labeled super funds and managed funds are as they say to be. They're trying to establish how much greenwashing is present in the Australian market. So it's not just you, it's not just me and other journalists who are interested in greenwashing. It's also the regulator as well. And this is a significant move by ASIC in doing so, because if you are found by ASIC to be greenwashing,
Mm.
you could fall afoul of legal obligations. This is a very significant. This is a very significant threat.
Yeah, you
But what
could
I
lose
find,
your license to operate,
you
right?
could lose your license to operate. There could be financial penalties.
How would you describe greenwashing? We've talked
I
about
was
it
going to say,
before.
it might be useful to
Great.
define what greenwashing is. So, greenwashing means conveying a false impression or providing misleading information about how a product is more environmentally sound than other things.
Mm.
And so it's become a blanket term for claims around any sustainability related performance. You'll sometimes see, like, greenwashing as applied to, ethical choices around human rights and things like that. It's become a bit of an umbrella term. The other term that's out there that I like is rainbow washing, which refers to the Sustainable Development Goals, because there's 17 goals and they have these beautiful 17 brightly colored blocks, and sort of all your rainbow washing because you're attributing to be part of the
Okay.
SDGs and you're not. But really, what ASIC is looking at is greenwashing. Although one thing that I find interesting, Shelley, is that ASIC is going looking for instances of greenwashing, but there's no official definition of what ESG is. So,
We've touched on this before. Let's get into the nitty-gritty of
yeah, there is no legal or regulatory definition of what ESG or sustainability is. And partially that's because it can cover a multitude of activities and outcomes. ESG, sort of taken at its most basic, is looking at information from the environment, like climate change, like biodiversity, like water security, social, labor rights abuses, modern slavery, occupational health and safety, and governance, like executive remuneration, conduct of board directors and company executives. So you take all of that information and you analyze how that applies to an individual company or a sector or an economy. And then you decide whether or not the price for what you're paying takes into account risks and opportunities. So you may very well decide, for example, there's a lot of superannuation funds that are invested in diversified mining companies that have oil and gas assets still part of them. And they say, well, look, we're comfortable with what the company is doing. We think they're on a trajectory to get to net zero. Therefore, we'll stay invested. Other investors will say, no, we want no fossil fuel presence at all, and we're going to be completely divested.
yeah,
Those are both ESG approaches.
yeah, yeah, exactly.
So, on
But
the
they're
one
very
hand,
different, obviously.
very, very different. So that's one of the challenges is in coming up with a definition of what ESG is or what sustainability is. But it does make it really challenging for an individual on the street to sort of understand what's being said. And I mean, like, ethical. One, ethical it can be a consideration of one. We have social norms and ethics, things that
Yeah,
we all tend to or ascribed to or say that we believe in. But ethics are very much a personal decision. So how
yeah.
can you ascribe a definition for something that is so very personal?
And it's very, not only is it personal, it's temporal as well. Like, obviously,
Mm,
there's the ethics, moral thing,
mhm,
which,
mhm,
there's that blurriness to it. But,
mhm.
slavery is obviously, if it's it sits under the S now. It's
Mhm.
absolutely not
Yep.
really okay. But 500 years ago, a
Mhm.
lot less than that,
Yep.
it was actually considered okay.
Mhm. And we've had, I mean, the modern slavery, obviously there has to be an update into what that means to
Hmm.
cover
Hmm.
a wider array of
Yeah, that's
behaviors
really
than,
interesting
yeah, than just, chattel in servitude.
because you can have someone enslaved as a result of not paying them enough money that they just
Exactly.
they
Yeah,
keep
bonded
coming back in
labor.
perpetuity. Yeah.
It's a huge, oh, look, I'll save us from going down the rabbit hole, but
Well,
yeah, modern.
I'd love to one day.
But again, I mean, the fact that we're going so far afield, we've started at climate change, we're now talking about labor and human rights. It speaks to the expansive nature of the universe.
Mhm.
So again, it really pays to be very focused on what the definitions are,
Mhm.
and
Yep.
focus on, to a certain extent, as to when you're looking at investment products, look at what your super fund trustee or your investment manager or your financial advisor, what they're doing, because it's important to look at their actions as to whether or not they're truly integrating ESG or ethics.
Um, I was just writing a note for
Mm,
myself before.
mhm,
Often when I think about um, ESG or just ethical investing,
mm,
I think about it in terms of sort of there's three components to it. There's
mhm,
this option you can negatively screen out
mhm,
investments.
mhm,
You can positively screen them in impact
mhm,
investing.
mhm,
Um, and you can also decide to own them, and then there's corporate activism, so engaging with the board um, through whatever means you have, you own it, you can vote, that sort of thing,
mhm.
um, to move them in a direction that you think is along the lines of,
Yeah,
um, well, I mean, climate change is an example,
exactly.
something that is going to be deliver less global warming
Mhm.
overall.
And these techniques are not mutually exclusive. You could screen out a bunch of things, invest positively in a bunch of other things, and engage with
Mm,
companies that you're invested in. And that's frequently what superannuation funds and investment managers do. They will do all three at once,
mm,
or dial it up and dial it down.
yeah.
Which
Do you
again,
think I've missed out an avenue there, or does that sort of broadly cover?
broadly, that covers
Okay.
that covers a lot of it. And then there's things like, within engagement. So if we're going to jump into engagement, let's define what that is.
Yep.
Engagement means that you, as an investor, have certain legal rights through your proxy vote to communicate to the board of directors who are meant to represent shareholders. Frequently, that's done through voting your proxy at AGMs, but increasingly, individuals and institutions have taken to things like communicating directly to company management and directors, and ask questions around environmental, social, and governance issues. It's also taken the form of activist investors or organizations putting resolutions to AGMs. Things like, there've been campaigns by the Australasian Centre for Corporate Responsibility, Market Forces, other groups, who have used the legal avenues of putting a resolution to AGM to force to gather, well, how would I put this? To take the temperature of investors
Mm.
regarding things like disclosures around climate change, human rights policies, a whole rubric of issues.
It's really twofold, isn't it, when you put a resolution? Because
Mm,
that means that the whole investor base of the company has to vote on it. So that, as
mm,
you say, it takes a temperature. But it
mm,
also signals to the whole investor base that this is a serious issue for you, and that if other people want to work with you collectively, this is
yeah.
something you want to work on the company with.
There's also the vote against directors,
Yep.
and there's also the vote on the remuneration report and the two
Mm.
strikes rule, which again, getting into the legislation, if there's not a majority support for a remuneration report at an AGM, for two AGMs in a row, investors have the right to vote to spill the entire board of directors. It's become a really powerful tool after the Hain Commission into
Mm.
banking.
Yep.
All four of the big banks suffered first strikes against them. Directors were not replaced, but a number of directors voluntarily stood down and had replacements put in place for them. So it's a very powerful tool of investors to use, and it's increasingly being used as an organized way, as you say, to signal discontent.
Yeah.
We're also starting to see companies doing voluntary say on pay votes. So I think Santos comes to mind, but there's, I think,
Yep.
5 or 6 other companies that will voluntarily put on their AGM a non-binding resolution at their 2022 AGMs, where they'll present their climate strategies. Again, It's non-binding, so if the majority of shareholders reject the climate plans, the companies are under no compulsion to act on it. On the other hand, as you say, if a majority of shareholders don't approve of your plans, that's going to look not great.
Companies really don't like this. Having been an analyst, I've known that companies definitely they do a lot of work to make sure their resolutions all get passed, and
Sure,
that's beforehand. Talking
sure.
to the major shareholders. So
Mhm.
it is definitely something they try to
Yeah.
avoid if they can.
Sure. And so, this puts, to put a resolution onto an AGM, it's not a huge threshold. It's 100 shareholders or 5%,
Okay.
whichever comes first. And so it can be a really effective tool. And it can be an effective tool for organizations to raise an issue, catch boards' attentions, and then
Yeah.
conduct private engagements where the resolutions then get withdrawn because commitments are voluntarily made.
Fantastic. I'm conscious of time, and I do
I
still want to
know.
get into consumption.
I
Is
know,
is
right?
there anything actually? I do have a couple of companies that I want to drill down to. Maybe one company question, but is there anything else in investing that you can think of to cover?
Oh, look, there I could talk
We
on and
could be
on for
okay.
hours, Shelley, but I think
Okay.
we could, within the confines of what we can overwhelm your listeners and
Yeah, that's true.
viewers with.
All right, my one question. So, um, a lot of companies have over the last 5 to 10 years, say, the diversified miners that you spoke about before, look
Mhm,
to divest
mhm,
fossil fuel assets.
mhm,
Um, Often, this process is the large company selling their asset to a
mhm,
smaller company.
mhm.
The asset continues to uh, produce
Yep.
because there's demand for it and it makes money.
Mhm,
So, there's a couple of questions around. Oh, it doesn't seem like that's actually an outcome that is really benefiting the world.
mhm.
Um, and
Mhm,
also, remediation aspects. A lot of mining extraction, no matter what it's in, there's requirements as a liability from that company at the end of its life to fix up that space,
yeah,
and that can be quite expensive.
yep.
And you know are there concerns that this is going to end up being have to paid for by the government?
Yep, 100%. Yep. You've raised all the big concerns there. If we're going back to where we started from, the fact that the IPCC has called for immediate and deep reductions in greenhouse gas emissions, um, at some point we're going. At some point, something's going to have to be done.
Mhm.
Now, whether that's we allow oil and gas reserves to continue to be exploited, and we believe that carbon capture and storage and utilization technology comes online,
Mhm.
such that they can offset.
Yeah, right.
That's an open question.
Yeah.
If we believe that there's a transition period where consumption of oil and gas gradually declines, renewable and battery storage ramps up, and things like green hydrogen come online,
Yep.
as Andrew Forrest has made a big bet with Fortescue Future Industries,
Mhm.
that's another avenue.
Yep.
But this gets to a point that we were talking about before, Shelley: hard versus uncomfortable.
Mm.
Um, we have some hard choices to make, but we also just have some choices that aren't hard, but they're uncomfortable
Yeah.
because they make us reconsider who we are in our lives.
That
Um,
segues so perfectly to consumption.
I think
You know,
so, and I
I
mean,
think
look, as you say, look, we're in a period now where big rapid change from companies is going to happen. I don't think anybody believes that. I think you were specifically referencing the BHP Woodside
yeah,
transaction,
yeah, absolutely.
Santos Oil Search.
BHP and the Mount Arthur Hunter Valley
Mhm,
coal asset.
mhm. There's also Santos and Oil Search as well.
Mhm. Yep.
You know,
Uh,
I
I
think
guess
it.
for me, when I'm thinking about this stuff, is I think, and it's it's a very unexplored thought, but
Mhm.
um, it would just be so much more responsible for them to actually close the assets instead of to divest them.
It's going to be a very interesting question, and I'd like to call your attention to something that happened overnight. A federal judge in the state of Alaska
Yep.
knocked back a permit for ConocoPhillips to drill the what's called the Willow site. It's on the north, I believe, the North Shore face. I'm not great on geography, but the federal judge rescinded a permit that was granted during the Trump administration on the grounds that the permit did not take into account climate change.
Yeah,
and the
right.
emissions that would come from the oil being extracted from the ground
Yeah, right.
in permitting. I'm sure there'll be a further case
Yeah.
that'll be further challenged up. The appeals may even hit the U.S. Supreme Court.
Yeah.
But that decision will, if upheld, will force ConocoPhillips to leave that asset stranded.
That's that's some great news.
It's an interesting
And
development.
it's great to see the courts getting involved.
Well,
You
it's
see
an
that more and
avenue, isn't
more.
it? It's an avenue, isn't it? So, there's many avenues by which climate change policy and decision making are going to be effectuated. Individual companies making commitments,
Yep.
investors making commitments. There's litigation and court action, and then there's government policy, both at the local, the state, the federal, and the international level. And we're in for a period of rapid, chaotic change, I would think, from that perspective. But again, we're going for the local when we want to talk about consumption.
Okay, let's go. Let's move to consumption.
I'm trying to keep an eye on time and keep
I
myself
got
on
it. Yeah,
track because, once you pop the bonnet on these issues, you can go in a million different directions.
you can absolutely. Okay. Um, where should we start on consumption? Should we start with houses? Because you said, that's
Yeah.
a major asset for a lot of
Mhm.
Australians.
Yep, it is a major asset for a lot of Australians. And look, this is an area where Australia actually where Australia shines on very strongly when it comes to the topic of rooftop solar. So Australia holds the distinction of having the strongest per capita uptake of rooftop solar in the entire world.
Good work, Aussies.
Aussie, 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 oi, oi,
Oi,
oi.
oi, yes.
The International Energy Agency said at the end of last year that Australia leads the way, with Germany in second place, Japan, Belgium, and the Netherlands in the top five. So Australians have voted with their pocketbook and have said that where they have the opportunity and the wherewithal to put rooftop solar on their houses, they will do it. More than 3 million houses in Australia now have rooftop solar. And it was really interesting. I was listening to a webinar earlier this week by the Clean Energy Council, where social researcher Rebecca Huntley was speaking. And she's someone who's done focus groups on climate change to determine, where people's where there's hesitation points, where there's advantages, trying just to suss out with people how we can communicate better around climate change. And she pointed to the fact that rooftop solar is becoming one of those aspirational household consumption items, like having a great new kitchen, which is great. And you can see that, rooftop solar on your house, it makes you feel good. You're taking direct action. You're spending your money in a way to bring around the world that you'd like to see.
Mhm.
So that's one way. Of course, again, in that conversation, it came up that, when it comes to rooftop solar, again, as with everything else we've talked about today, it can be confusing, it can be complex, and it can be hard to figure out how to go about doing it and how to finance it. These are pressure points that we can solve for, though.
That's true, but it is also, I guess, sort of an uncertain landscape into which people are, we're heading in terms of
Mm-hmm.
solar on the rooftops at the moment. And what I'm talking about is, to this point in time, a lot of people have been paid to send their excess energy supply onto the grid.
Mm-hmm.
But I think there's recently been some change to that,
Yeah.
where at certain points you might actually have to pay to get rid of your excess supply. So it's a potential disincentive there.
Can be. Yeah.
We
Look,
don't know how that's going to change, but I get,
AMO, the energy markets regulator,
yeah.
is putting together its strategic plan going forward. There's no doubt that we have to adjust our electricity grid for demand. And I mean, like, demand on a number of levels, right? There's, the fact that instead of feeding power to houses, you could have power going from houses into the grid. You have to make sure that operability and reliability is there. Over the next decade, the cost of batteries battery storage is going to come down. And we have to work out how to effectively use batteries to, again, assure reliability and operability.
And
And
also
then,
solar is like, I don't have a lot of roof space, but
yeah.
someone said to me lately, with technological advance, you'll find you'll be able to collect more per square meter
Mm-hmm.
as it gets better.
Yep.
So, that's certainly a positive for it.
100%. And I mean, look, there's great experiments going on right now. AGL is funding a study at the moment to gauge whether or not people can use solar and electric vehicles and use their electric vehicle battery as a de
Yep.
facto battery, which is
Yep.
just really cool. Like, we're talking about behavioral changes at the individual and collective levels, which, gives me a lot of hope. Because I think, as Rebecca Huntley said, if having access to renewable energy is something that's seen as aspirational, that's a good thing. We just need to make sure that it's affordable and accessible such that we can all take advantage of it.
Absolutely. Again, I think it was the same daily podcast that I was listening to from the New York Times. It was talking about, two of the major areas in which we need to see reforms to see a big change would be energy systems and travel. So, we've talked about energy, but I realized that I hadn't probably given my energy enough thought. And, there's definitely greener retailers out there. And browner ones, as you'd say. So,
look, I'm not a specialist in consumer choice and energy markets, but I imagine I've looked at choice.com.au, for example, just for my own personal education. So there are resources out there, so you can evaluate your utility companies for your choice and access and things like that.
Yeah. Okay. So energy, travel.
Let's not even talk about the one thing you can say about COVID is the fact that it's we have not been able to use airplanes very much in this country. You can probably hear I'm not from around here. I haven't seen my family in the United States for a very long time now, but at least it's good for the carbon miles.
Yeah, we can laugh about it, but I think travel is one of those ones where it's a big choice that you could make to make a difference. I don't know, maybe I'm wrong.
It's the aviation industry falls into, and again, I'll use a little bit more industry jargon. It falls into the hard to abate category because of the type of fuel that's used currently.
Okay.
It's one of those industries. It's hard to abate, but it's necessary to the comfortable lifestyle that we all live. I mean, not just our personal and business travel choices, but freight, transport, logistics.
Yeah, food, and that's what I mean.
Air transport is heavily part of our lives, and so this is where companies, this is where investors and companies have these engagements to talk about. Investors telling companies, look, we know we're going to be invested. We're going to be invested in Qantas. It's part of the ASX. We would really like to hear what you're doing, and we would like to express that. You can invest your capital towards efficiency means, towards improvements in biofuels, for example. And this is where companies can take the temperature of their large shareholders and say, okay, look, yes, we can allocate money towards something that may not pay off, but it's worthwhile if it does pay out.
Yeah, right. Okay.
So yeah, it's I think so. It's aviation, it's steel, and it's cement are three areas of our economy that fall into this hard to abate yet intrinsic to our lifestyle, where we really need to pay a lot of attention.
So it kind of comes back to the uncomfortable versus hard.
It's uncomfortable versus hard. Exactly. There's a lot of work that needs to be done as quickly as possible. There's going to be a lot of investment into technologies that may not pay out. But we all need to be pulling. And this is where government policy, government support comes into play as well, which is, again, and again, it's the politics discussion.
Okay. Well, I'm really conscious of time.
No, we've moved along. We've covered a lot of ground, and it's been very fun.
It's been fantastic. Okay, maybe before I let you go, can we recap some of the ways in which people can influence? We haven't talked about so much government. We've definitely talked about companies and also there's the legal avenues. So yeah, maybe do you have one or two tips for engaging with government to try and persuade them that they need to take more action?
Your vote is your voice, both at the local, the state, and the federal. And I think, being conscious of evaluating, I don't think, how would I put this without opening a can of worms? I don't think either of the major parties have made commitments that would be enough to get us to where we need to be under the Paris Accord, the Paris Agreement.
Just to be clear, the Paris Agreement is not yet on track with what the IPCC have said we need to do.
Exactly. Yeah. So
they're not even getting us to what
exactly. It's not. Yeah. So there's a lot of work that needs to be done. Your vote is your voice. This is not a political podcast, or else I'd have a lot more to say on that subject. But I think that would be probably the fundamental thing. You have a voice in your investment choice, in your political choice, and in the choices you make it as an individual consumer.
Okay.
Yeah.
Excellent. That's what a great way
And
to
then I
do
think the other point we didn't discuss necessarily,
it.
Shelley, as well, philanthropy comes into it as well.
Yeah.
Where your investment choice may not accord 100% with your ethics, if you're in a position where you have investments that are paying out, you can support philanthropically
Okay.
the causes that you believe in as well. There's some great charities out there, and that's the other way to go about it. I don't necessarily think you have to be a large endowment or family office to act in ways to support things that are important to you.
Excellent. So if you wanted to find out a few of those charities, is there
Charity regulator or
a
give
charity
well,
regulator?
yeah. Look, I'm not an expert on that one. There's a publication, Pro Bono News, that
Mhm.
covers the not-for-profit sector. I'm a regular reader of them. That might be a better guide. So, but yeah, I'm not at all. I don't want to misinform anybody.
To do a bit of digging then.
I think you need to find another guest who's more
Oh, yeah.
conversant on those topics.
Thank you. That's a great idea. Alrighty. Rachel, thank you so much for your time today. This
Pleasure,
has been
Shelley.
great.
Pleasure,
Um,
Shelley.
could you tell the listeners how they can hear more from you and get in touch with you?
100%. So FS Sustainability is a weekly digital publication. We have a newsletter that comes out at 8 a.m. on a Friday morning. To subscribe, you can go to www.fssustainability.com.au. And that weekly newsletter is free. I'm also on Twitter at SustReport, SUSTREPORT, on the LinkedIns and the Facebooks as well. But yeah, please do come and subscribe. I do cover a lot of issues in a very short amount of time.
Excellent.
Mm.
Right. So before I say goodbye for the day, if you have any feedback for me about this episode or any ideas for a future podcast, please let me know in the YouTube comments section, or you can send an email through to contact@nucleuswealth.com. Did you know that Nucleus Wealth offers personalized investment portfolios, especially along your ethical beliefs? And we also offer limited investment advice. You can find out more at nucleuswealth.com, or you can give us a call on 1300 623 863. Thanks to Jaden, my producer, for his work today and on all of the shows. And if you know someone who you think would enjoy the episode, I hope you share it with them. Otherwise, thank you from myself and the team. I look forward to seeing you in the next one.